Hello and good evening, everyone. Thank you. Just a little bit technical difficulties. We'll be up and ready in 5 minutes. This evening, we want to welcome you to another special program. I know we just finished with the prayers, and now we're going to talk about taxes. Something that is very special to everyone. I don't know about special, but I think that is something that affects all of us. So, in behalf of the Family Life Department and myself, Myriam Dolsaint, for those who do not know me, and Myriam Dolsaint, we are the Family Life coordinators for the church, First SDA Church of West Palm Beach. So, we want to welcome each of you, one of you, those of you that is in the church, and also those of you that are logging in online. So we want to welcome you to this special workshop. I can tell you, and I believe the pastor have already stated, it's going to be something very special. You cannot afford not to remain on the line and not attend this workshop. It's going to be something special because that is something that affects every one of us. So, and we have a special guest. The special guest is somebody that is very special to me, and also somebody that the church already familiar with. But just before I introduce her, let's say a word of prayer. Let's bow our head for a word of prayer, please. Heavenly Father, once again, we want to thank you. Thank you for your grace. Thank you for your blessing. And thank you for your mercy. And thank you for your forgiveness. Father, you've been with us all this morning. Please stay with us a little bit longer as we present to you as a special education workshop that's going to be dealing with finances. You have blessed us spiritually, you have blessed us financially, but we need to know how to manage it. So as we're going to present to your people the right way to manage their finances, as the Bible said, given to Caesar what is Caesar, and given to you what is due unto you. So we want to know how well to do it. So, Father, I ask that you be with the speaker of the hour that's going to present this special workshop, and may your spirit dwell among us so we can present to you that is something that is acceptable. We thank you now in the name of Jesus Christ that live forevermore. Amen. All right. As we are waiting for the speaker, and I want to quickly again welcome each and every one of you, those of you that's already online waiting, and also those of all you that are in the church already. And thank you for remaining with us. We know it's been a long day, and also we know that some of you are anxious to find out what information that you need that is so special that we want you to stay behind and to find out. So I can tell you, the person that's going to present this workshop is somebody that is specialized in taxation. Her name is Myriam Dolsaint, and like I said, somebody that's very special to me. She's my wife, and also mother of two beautiful daughters. But not only that, but she specialized in taxation, meaning that she's been working for the Department of IRS or former IRS agent for the past 15 years. Also worked in the Treasury Department as an auditor, where she oversees and be able to audit the IRS. And as well as somebody else have also worked in the private practice where she worked with many accounting firms in terms of accounting and different aspects. So we are fortunate to have her in the midst of us. She's a church member here, and she'll be able to give us some information. But also she has a master's in forensic accounting. So we have heard, like when we're watching TV, we heard about people that have forensic. So that's somebody that know that how to find the numbers. If the number is there, she know how to find it. So she specialized in forensic accounting, and to be able to give you some ideas how to better use your resources. Because at the end of the day, We do not want to work hard and somebody else come and put their hand in our pocket and we have to give it away. So not only we want to utilize it for our family, but we want to utilize our resources for God. So that's the person who's going to be here and talk to us about. And also she's an EA, which is is an enrolled agent, which is considered as one of the highest certification for somebody to represent those who may have problem with the IRS. For example, if you have audit, she can represent you before the IRS in all 50 states. But she realized that working for the IRS, she was representing the government. She have decided to retire from the IRS, and now she has her own company, which is called Up Focus Financial. So therefore, she can represent the taxpayer instead of the government. So I am very happy to have her here, and I'm very happy that she can give us some information that can help us. So we're just waiting in Sister Myriam, who's going to come and to start this meeting. Just a few notes for those of you who is logging online. We will give you time to ask questions, but there will be a time she will let you know that when you can ask questions, there will be question session, and you can start from right at the beginning or middle, and at the end you will have also time to ask question. To no further ado, we can have Myriam Dolsaint, who's going to start the presentation. Please give us a minute. She's coming. So how are we doing tonight? Those of you who are sitting here, how are we doing tonight? Are we happy? Are we anxious? Pastor said we are happy in Jesus. Thank you, Pastor, because as long as we have the breath of life in us, we are happy. Because there's a little saying, I'm happy, and you know it. That's what it's all about. All right. Miss Myriam Dolsaint, please. Oh, Mrs. Dolsaint. All right. Thank you, everybody. And I'm passing the mic to Myriam, and she will continue with this presentation. Thank you so much.
Miss Dolsaint, you know you're going to ruin my life, right? I mean, how am I going to pay for this? I'm in my 60s. I'm trying to make a living, have no money for retirement. Listen, this is a true story. A few years ago, I was sitting in front of someone's dining room table. An older lady in her 60s crying in front of me. Why? Because of a big IRS tax bill. At that moment, I felt so hurt. And I realized, why am I doing this for? Yeah, I was getting paid good money, but I wouldn't feel fulfilled. I mean, seeing an older lady crying, I mean, if you're in your 60s, I'm not calling you old, okay? So it really broke my heart. So at that moment, that's when I started realizing I was on the wrong side of the table. So I had to leave the scene, and I told her, calm down, because, she was very upset. I don't know what she could be doing, so I just left, and I told her I'll meet her at the office when she's ready. So that's when I said, okay, I'm using all the skills I've gained from IRS, all my experience, my education, and I made the decision I'm going to be on the right side, which will be the taxpayer side. That lady, she had no one to help her. She had a representative. However, each time I called the representative, he'll tell me, contact the taxpayer. So could you imagine? Well, today we are going to talk about the tax changes for 2022. So the reason it's 2022, right now in tax filing season 2023, that's when we report prior year. So when I say this year, during the presentation, I really mean 2022. And if I say prior year, it's 2021, so everyone can understand. Okay, just a quick disclaimer. This is just for informational purposes, educational. It is not for advice. If you need advice, contact your tax professional, and also go to irs.gov for any latest information, because the tax updates is like always updating. They're always making some changes. So, okay, so what we're gonna talk about today, we're gonna talk about the key players, people who make the difference in the tax laws, the annual updates, tax law changes, and some bonus tips I have for you. Are you guys excited to be here today? All right. I mean, this can be a boring topic for some, but it is very, very important, very crucial that we get informed, we stay informed, and we stay on the know. It is our duty, our responsibility to take control of our lives, including our finances. And we cannot avoid taxes, paying taxes, can we? No. But there are some loopholes. Okay, so there are some of the key players. We have the acting commissioner, and those are people on the IRS side, and we have people in the Speaker of the House. Those people, they play big roles in the tax laws. And of course, we have our president. And I don't know if you guys knew, or if you pay attention, the Secretary of the Treasury, the name gets printed on each bill each time they switch one. So just wanted to point that out. So before we continue, I just wanted to do an icebreaker. So we have Kilik is monitoring the chat. I can't really see anybody, unfortunately. I don't know if there's a way I can. Okay. So we're gonna do the icebreaker. This is the question. I want you guys to participate with me. I'm not here to just give you information. I need some feedback. I wanna know that you guys are here with me. Come on, let's go ahead and do this, okay? So it's, would you rather get a large tax refund or owe a little bit? And tell me why. Anybody? Okay, I'm gonna move past the mic. Okay, we're gonna get a mic. Anybody online while we get in the mic here? Okay, someone says both.
A large one.
A large, who says that? I'm sorry, I cannot see you.
Jennifer.
You said a large refund?
Yeah, I prefer to get a large refund, yeah.
Tell me why.
Which means, which would mean that I had overpaid, or whatever credits I got allowed me to get a bigger refund. I prefer that than at the end to be paying. Okay. So yeah, so that's why I prefer a larger refund than a small refund, because a large refund means that either I overpaid or I got some credits that allowed me to get the refund.
Okay, thank you, Jen. Anybody else?
A small.
But that's Brother Grant. You said small. So you rather owe a little or small refund. Can you tell us why?
Because IRS doesn't give any interest. It means that you overpaid and they were using your money. So if you can calculate and have the smallest refund you possibly can, it means that you can use your money instead of allowing the government to use it.
Okay, that's a good one. Anybody else want to go?
I agree with Brother Grant, Elder Grant.
I'm sorry, I didn't hear you.
I agree with Elder Grant. It means I kept most of my money to do what I want.
Okay. Anybody else want to go? No, anybody in the audience? Okay, Elder Cousin.
And the time you have IRS having your money, you could have used it rather than giving it to you at the end of the year.
Okay.
So it's best for you to calculate it where you pay as much as is required, but not over and above that, so you're looking for a big refund.
Okay, Brother Cousin, thank you. Well, Personally, I agree with most of you. It should be getting a small refund or you owe a little bit. Reason why? It all depends on you, how good you are with your money, how good you are to manage your money. So if you get a big refund, you have planned to buy a big purchase, or if you're gonna buy a house, you need extra for down payment, it's fine. But you are giving the IRS, the government, interest-free loan. They're not giving you anything back, they're just holding it. Most of the time, the refund is really money you paid. It's not money they're giving to you, unless we're gonna go over different areas where it's not really money you pay, it's money you're eligible to get. So you can use that refund during the year to pay off debt or to invest instead of leaving it in IRS hands. We don't want to leave a tip for IRS because they don't think of you guys, right? So if you realize that you get a large refund and you want to change it, or you owe a lot at the end, you can always update your W-4. This is the form you use to change your withholding. As you know, we are in a prepay system with the taxes. You pay your taxes in advance. You get paid, you pay your taxes, then you get the money. So that's how it is with the system. So it's always best you use W-4 to update your withholding to make sure if you want large refund or if you want to owe a little bit. Personally, I like to owe a little bit, not too much. Okay. Okay, technical difficulty is not moving. Okay. There you go. Okay, so let's go over some tax deadline. So the tax filing season started last Monday, January 23rd, and we have other deadline, the tax day, what they call April 18, that's when taxes are due. It's last day to file for an extension to pay your taxes. Remember, you file an extension is just an extension to file, not to pay. You must pay your taxes by April 18. Otherwise, you're gonna face a lot of penalties for late payment, and you don't want that. Plus interest. And the extension date is October 16th. Okay, remember, it's important that we e-file. E-file will make sure that we get the refund faster. Normally, we get it between 8 to 21 days, but you know there's a backlog with IRS, so it might take a little longer. The sooner you file, the better, but I will talk more about this, pros and cons of filing sooner rather than later. And make sure your return is error-free. And I will cover this more later, but there's a credit called Earned Income Tax Credit. Actually, yesterday was Earned Income Tax Credit Awareness Day. That's really, really big with IRS. It's a really big credit that a lot of people are eligible for, but some of them, because they don't make any money or they don't make enough, they just don't file their returns, and they are missing out. And also the additional child tax credit. If you have those on your return, you probably won't see your refund until mid-February. And unfortunately, this year, we will be seeing a lower refund for most people because of the tax update. We have a lot of changes compared to 2021 that's not in our favor. So tax brackets. Who can tell me what tax bracket is, if you know? And do you know what tax bracket you fall into? Anyone here or online? Come on, talk to me.
Rate at which you're taxed based upon your income.
Okay. It's a percentage of taxes you pay based on your income, your adjusted gross income. And there are seven tax brackets. And you can see it on the screen. I don't need to repeat it. The highest is 37, and the lowest is 10. It all depends on the amount that you report on your return, and also your filing status. So this is like a chart I put together for you. If you are in the 10% and you're single, up to 10,275, you pay 10% of that. Anything above, you go to the next bracket. And I'm going to do a quick example so you guys can see. So this is the scenario. If you are a single filer with $50,000 in taxable income, can you tell me what is your taxable bracket, your tax bracket? With 50,000, anybody? You can, 25% is not up there. Someone said 25%, but we don't have it on the chart. Anybody?
Looks like 22.
I didn't hear you.
No, 22.
22. Everybody agree? That's correct. 22. So what does that mean? If you're in a 22% tax bracket, you make $50,000. Does that mean you pay $11,000 in taxes? Anyone? Come on, talk to me. I told you I'm not here to talk to you. I want you guys to talk back to me.
Well, you have a what do you call it, a deduction. So I would imagine that the deduction would come off the 50,000 and whatever. I mean, like the 12,000, is it? I'm not sure. So the deduction would come out, and any other deduction that are allowed, and then the balance is taxed.
Okay. So this is actually, this scenario assumes that it's after the deduction. And we will cover the deduction that Jen is talking about. So does that mean you pay $11,000? Someone said no here.
No.
Anybody online? Come on, people, talk to me. Come on.
No.
Okay.
No.
No, I'm hearing no. That's correct. You don't pay $11,000 because of what I just explained. You pay a portion of it. So this is a calculation. You pay 10% on the first $10,275, $75, and the next tax bracket is 12. You pay between that 10,276 and up to 41,775, and then you get to the 22%. As you can see, the 22% only apply to a small amount. So the biggest one is the 12%. So in return, the total tax would be about $66,000, which makes it about 13% effective tax rate. That's what effective tax is. There are three types of taxes. The effective is after you do all the calculation, all how I just broke it down, and then the total becomes effective. So in this example, this filer will only pay 13% of the adjustable gross income. Okay. So here's another update for mileage rate. If you are in business, this one is more for individual, but if you are in business or you do medical, and there's an update, this is in our favor. It went higher. It's higher than it was in 2021. You guys can see that. Now the big one. You guys should get excited about this. Child tax credits versus deductions. Jen started to talk about deductions. I don't know if she confused any of you, but we're going to clarify it right now. Deductions. Deductions reduces your reductions reduce your taxable income. So we have standard deduction, and we also have itemized deduction. Standard is what everybody is qualified for, eligible for, I meant to say. Itemized is based on your personal, what's going on with you personally. So if you have a high mortgage, for instance, and you probably end up have to itemize instead of getting standard. These days, because the standard deduction is so high, most people just take the standard. So as Brother Ken was saying earlier at church, and I can see why he doesn't want to print all the receipts for for the tithes and offering we pay, because if you have less than the standard deduction, there's no need to collect your receipts, because just take the standard. You take the highest. Now, tax credits. Tax credits, on the other hand, it reduces your taxable and your taxes that you owe. So this is what the big one is. What you need is the tax credits. So if you owe $100,000, that's a big example, if you can have tax credits for $100,000. So this is exactly, that's one of the strategies I want to say that Donald Trump used, that his tax return, there's like, I believe in 2019, he only pays $750 in taxes. And I personally, and I looked at the return, he didn't cheat. He just used strategies that we don't know about because most of the tax preparers, they don't understand the tax laws or they're afraid of taking certain deductions because they're afraid of IRS. And let me tell you, as a former IRS agent, you guys don't need to be afraid as long as you follow the law. You just have to know the rules of the game so you can play the game by the rule. And as you do in your returns, your business, do it audit proof. So whenever IRS come and knock, and most of the time it's a matter of when, not if, you'll be ready. But don't be afraid to take deductions if you are qualified for them. Again, we have refundable deductions and we have non-refundable deductions. Refundable means that if your taxes is higher, if, for instance, you owe $100,000, let me put lower. You owe $1,000 and you have refundable deductions of $1,200, you will get a refund of $200. But if it's non-refundable, you get a deduction of your tax is $1,000 and your non-refundable is $1,200. You just don't owe any taxes, but you don't get any money. And we just went over this. This went up from last year. And if you married, filing jointly, you get $25,900 deduction, which is pretty nice. And there are some additional deductions. You can read it on the screen. If you're older, 65 years old or older, or you're blind, you get extra deductions. Okay, we went over the refundable credits. EITC, ACTC, those are refundable. We just explained what they are, and we have non-refundable credits. So this is just an example. This is a client I actually did her return for. So her W-2, she had $30,000, approximately $31,000, and this is the standard deduction on line 9 I was referring to. Because she's head of household, she had to reduce her taxable income down to $12,637, which is nice. And on line 12, this is where the taxes is. Based on, she made $31,000, she didn't pay taxes on the $31,000. She paid taxes only on $12,637. And on line 13A, this is a child tax credit. We discussed that earlier. She had a credit of $1,000. Right there, if that child tax credit was $2,000, she would have paid no tax. But it's less than the tax, so it's $263 on line 16. And from her from her W-2, remember what I said? It's a prepaid tax system. She withheld $3,749, and she had EITC credit for $1,617. I know, I hope this is not confusing to you, so I just wanted to give you a visual of how it works. So in total, bottom line is, she had a refund of $5,103 when she only prepaid $3,749. All that was because of credits. Okay, let's do a quick icebreaker so I can hear from you guys. Okay, I want you guys to think of a tax joke. You don't want to hear it from me because when I give jokes, people don't laugh. So anybody can think of a tax jokes? You want to share? Anybody? No? Anybody online?
Tax ain't no joke.
Okay. Tax and no joke. I like that. Anybody else? Okay. call on some people. Oh, now I can see. Oh, my friend Mindy is here. Hi, Mindy. Mindy is my former colleague. We worked at IRS together. Okay. Mindy, can you give us a joke?
Why us?
Two things are certain in life: you pay taxes and you die.
Okay. Hi, Tina. Okay.
That's a joke. Trump don't pay no tax. He not dead.
Um, there's a building down in Washington. The first time I saw it, it says on it, taxes is the taxes is the price you pay to live in this society. Something to like. So you must pay taxes. It's not a joke, but
Okay.
It's a fact. I have one.
Okay.
Go ahead.
I have one. I have a joke.
Who
Go
is,
ahead, Deacon.
who is that?
All right.
Who's speaking?
Dr. Hellenist,
Okay, go ahead.
why are some accountants so good looking?
Why?
Because they have great figures.
Oh, that's a good one. They do have great feet. Okay. And somebody asked on the chat, why did the IRS audit the chiropractor? Can you answer the question? I don't know the answer. You can type the answer. Because he owed back taxes. Okay, that's a good one. I like that. Okay. Well, I have one. It's on the screen. So, ever wonder why it's called a Form 1040? So, for every 50 you earn, you get 10 and they get 40. So, you pay more. Okay.
Okay.
And the last one.
That's really funny, Myriam. I like that.
And ever wondered why they called it the IRS? Because it's all theirs.
Yes.
So, okay, so that was a good icebreaker.
Yeah.
Continue. Are you guys enjoying this so far?
Yes,
Yeah.
you did.
Okay, so the child tax credit. So we have, this one is not in our favor this year. It used to be, it was in 2021. We were getting $3,000 or $3,600, and some people were getting, the last 6 months of 2021, they're getting an increment, $250 a month or $300 a month. But for 2022, you only get $2,000 per child. So that's a big loss. And
Back to pre-pandemic.
back to pre-pandemic, exactly. Back to reality. So there are some income limitation to get that. And the child must be under 17 years old as of the end of the year. And of course, you're in the Social Security, and we just covered that. And we also have the Child and Dependent Care Credit. So this is an expense you pay to care for your child while you're at work or you're looking for work. And again, we lost $1,000 on that one. It was $4,000 in 2021, and now it's $3,000 per child. Okay, I'm going to repeat that again. The maximum you can get is $3,000 this year. This is the credit. So it doesn't matter how much you pay. There are some limitations, but you cannot get no more than $3,000 per kid. And this is an expense you paid to take care of your child while you're at work or looking for a job. Okay,
What about if you have about 6 kids?
If you have 6 kids,
Yeah. Yes, ma'am.
you cannot get no more than $6,000, even if you have 10. So keep it to 2, just like I do. I'm kidding. There's a reason why I did 2. I was still working with IRS, and I said, oh, after 2 you don't get much. I told Killick, we're done. We're not having any more kids. That was a joke. Okay.
All right, so it's 3, right? 3 kids.
No, for this one, it's 2 or more kids. I mean, 2 or more. So if you have 2, you have 3, you have 4, it's still the same amount.
Okay.
Oh, that's not the, wait. I think you're getting it confused with the EITC. This is the Child Independent Care Credit. That's different.
No, not the care credit I was talking about. The regular tax credit for the child. It's 2,000.
Well, yeah, there's a bunch of credits that kind of sound the same. That's the child care credit you're referring to, the one we just discussed. And then the earned income tax credit, I said earlier, if you guys came late, yesterday was the EITC Awareness Day, and IRS is very big on that because you can get a lot of money from it, and we've seen where it's been abused by some tax preparers, unfortunately. That one, you can only have 3 kids. You can do up to 3 kids, and it's for low to moderate income taxpayers. And it helps to reduce poverty, and you can have investment income with that. Before, it used to be no investment income, so that's a plus. You must do 25 to 65. So what I was gonna say, IRS, because it's been abused a lot, every year they do an initiative where they go after the taxpayers. The tax preparers. So tax preparers, if you're on the line or you're here, you need to do it right. I mean, I've seen it myself where I remember there was this lady, I assessed, and I'm not making this up, I assessed over $250,000 of penalties only because she was doing everything incorrectly. Like if taxpayer A has 4 kids, because anything beyond 3, you don't get credit for, so they'll borrow a kid from one taxpayer, put it in someone else's return, and that child is not even a qualifying child for taxpayer B, and it's a big mess. And if IRS comes, they will come after you, and they do charge, I believe it was like $500 at that time. It was about $500 per penalty. Okay, so this is the credit, and this is the income. The first column, the maximum AGI, this is the income you're supposed to have the most. If you have more than that, you're not qualified. And this is a maximum credit you can get. So if it's 3 or more, you get $6,935. That's pretty nice. I'm sure you guys have seen those signs up. They say, yep, we do EITC credits, and you can get a lot of money. So you have to be qualified for it, even though it's abused. But as Christians, even if you're not a Christian, it's good to use ethic. So, midpoint, any questions?
Yes. So, when you say they go after the tax preparers, not the client, but the person who is actually doing the tax for the client?
I'm sorry, it's not clear. Can you ask the question again?
For
I didn't
the
hear you clearly.
EITC, can you hear me?
It's not clear to me, but try again.
No, I was asking, do they go after the actual client or the person who prepares the tax for the client?
Okay, so that one is a special program they do every year. They go after the tax preparer, the person who prepared the return. And if they see it fit, they're gonna go after the taxpayer. It all depends on what's on the return. And a lot of times we see the taxpayer is blaming the tax preparer, and the tax preparer is blaming the taxpayer. So for that one, they go after the tax preparer because they don't want to abuse it. Because low to moderate income, sometimes they don't have the education. They don't know what to expect. They only go by what the tax preparer is telling them to do. So for that initiative, it's just for the tax preparer. Anybody else?
I have a question.
So let me see if I understand. So if I have 4 kids, what people do is they give one of their kids to a family member who has only 1, so they can get the extra. Is that what's happening?
This is what not to do, okay? So they just if I have 4 kids, for instance, I cannot get no more benefits after the kid number 3. So the kid number 1, I could give it to my sister and say, okay, you're gonna make, and this is what not to do. I'm saying it again, okay? I'm gonna give it to my sister. I say, if I give you my 4th child, you can end up getting $3,733 back. So as a kickback, you give me $2,000, you can keep the $1,733. And that's what people are doing out there. And it's not ethical and it's not legal to do. So again, anything more than 3, it's not to your advantage with IRS. Okay, we have a question in the house.
Miss Myriam.
I'm going to repeat the question.
Hello? Hello?
I will repeat the question.
I don't know if I'm talking.
Yeah, someone is talking.
Yes, I am. Can you hear me?
I can hear you.
Yes. At the beginning of the year, they ask you to fill out a withholding form. Do you suggest extra withholding or no after you claim your 0 or whatever?
Extra Do I suggest extra withholding?
Yeah.
It depends on your tax bracket. If you fall in certain tax bracket, even if you put 0, you may still owe IRS. So there's a line on the W-4 where you can put extra withholding. Correct. You can do that.
That is correct. So you don't pay any extra taxes, is it?
So you don't have to pay extra. So that IRS has a tool on their website where you can calculate what to put on your W-4 based on your projected income.
Okay. All right. Thank you.
And how much?
Okay, we have a question in house.
Yes. So, based on the numbers I see up there, when does it apply for 0? That's one. I don't understand the scenario that would occur because I thought it was children or relative income that comes on there. Or that's my first question. And then second, it can't pass a certain AGI.
Correct.
So that if you, for instance, have 1 kid but make more than the 49, then you're not even qualified for that at all. Is that right?
Okay. Let me answer the first question. Okay. First question you asked, the one that says 0. Yes. Actually, last year, 2021, that amount was tripled. If you don't have any kid, they still allow you to get the EITC. And it went significantly down. So there are special rules. I don't put everything up here, but yes, you have to be 25 to 65. And if you file separately, there are special rules to that. And you must have some type of earned income. So you cannot, if you're not working at all, you cannot claim that credit. So even if you have, and that's another thing, you're probably not working, you're doing side hustles, which I don't like side hustles. I like to see if you're doing a side hustle, treat it like a business, so you can get all the deductions that you can get. So if you're doing like a side hustle where they're paying you cash, sometimes we tend not to report that cash. But if you're saying, okay, I have no income, I'm not filing my return, and really you got a good, let's say $5,000 for the year of cash payment someone gave you, if you had reported that, and let's just say you have 2 kids, that's $6,000 you leave off the table. So it's really, sometimes we're thinking we're helping ourselves by not reporting cash payments. We're trying to cheat IRS, and it's really you cheating yourself.
Sister Myriam.
Yes.
So I should treat my side hustle as a business then?
I don't believe in side hustle. The term, I hate that term, but yes.
All right.
You should treat it like a business.
My side jobs, the jobs I do with cash, that I get in cash. Should I treat that little business as
absolutely
a business? That little, the money the income I get from it, should I treat it as a business?
Yes, because first of all, the tax code says this is the thing. When you have a business, you just don't know. When you have a business, you have a direct partnership with IRS. IRS tells you all the stuff that you can deduct. Out of over 3,000 tax codes, only a small portion dedicated to income. Everything else, they tell you how you can deduct stuff. And it's you have to know, you have to work with the right tax professional that knows the laws, that always stay up to date with things, that can help you to know what those things are. For instance, I'm going to give a good example. You can have a business, you have your kid work, that your kid can work in the business. It's a deduction, and you don't even have to report that income you pay your kid. So that's another subject for another time. So when you have the business, yes, you must report it. Any side hustle, the tax code say any income is reportable unless stated otherwise. So if the tax code doesn't say it's not reportable, or it's not, if you don't report it, I'm sorry, any income should be reported unless stated otherwise. So yes, if you have a side hustle, you must report it. And the thing is, you get to take deductions. And if you don't report it, you lose all the deductions. And to answer your second question, I forget what the second question was.
The AGI.
Or the AGI, yes. Anything above that amount for single, you're not qualified. And this is another thing the tax preparer do. I'm not going to go through all the, you know what? I'm not going to put bad things in your head. I'm not telling you anymore. They do find a way to mess with this. It's really horrible. Okay, we're going to move on. Oh, this is a big one. You guys should be excited about this. Those are the things that we have to spend time every year as a tax license professional. I have to do at least 72 hours for 3 years of updated tax update. We have to learn. I don't like hearing my voice talking. We have to stay up to date, do continuing education. That one, I'm sure most people don't know about it. It's called the Saver's Credit. Listen up, this is really great. If you are low to moderate income, the IRS is helping you to save for retirement. So the maximum amount for this year is $68,000. So if you make less than that, it's not too late to take advantage of this. You have up until April 18. So the only requirement, well, there are some requirements. I'm just going over some of the most important ones. You must contribute to a retirement account. It can be a traditional IRA, a Roth IRA. It could be, but it cannot be a retirement plan from your job. It has to be something you do outside of work. Okay, listen up. The maximum you can get as single is $1,000. So let's just say you put $1,000 into the retirement account, and they have percentage you can take. So if you only make, I don't put that up there, but let's just say you make $19,000 for the year, you put $1,000 in retirement account, you put $5,000 in the retirement account, you will be eligible to get $500. I mean, you put $1,000, you get $500 back. And on top of it, if you have a traditional IRA, you can still take the deductions from your return. So it doesn't get any better than that. So if you are in that situation, you have low to moderate income, or you know someone, just tell them to contact the tax professional to discuss the Saver's Credit. Okay, and then charitable deductions. Usually, we're running out of time. I'm gonna be done soon. Usually, you have to itemize to get it. But last year, IRS allowed us, when I say last year, 2021, $300. And unfortunately for this year, we don't get it. So this is gone. And the FSA, if you have kids, please, please, please don't miss out on that. This is pre-tax money.
Sister Myriam,
Yes.
can you run the one again for me? The previous slide. About yes.
The Saver's Credit?
Charity contribution.
Okay.
Yeah. Explain it for me.
Explain it again?
Yeah.
Okay, so the charitable contribution is, for instance, money Some people are not comfortable with the tire money when they get the receipt. They don't want to take it on their return. It's a personal decision. So if you are one of those who would put it on your return, usually you have to be able to itemize. Like I explained earlier, if your expenses are more than the standard you itemize, this is when you can take it. But if you don't itemize, they don't let you take it. If you take the standard, it's either the standard or itemized. It goes in the itemized deductions. So this year we don't get it, but 2021 and 2022 we did have $300 per person. One was per person, one was per return.
Okay. All right, thank you.
You're welcome.
I have a question.
Go
I
ahead.
think I'm a little bit confused on itemized versus standard.
I'm sorry, Sister Jen, I didn't get that. I didn't hear you clearly.
Itemized versus standard. Could you explain that concept, please? I think I'm confused.
Itemized versus standard.
Oh, I'm sorry. Itemized versus standard. You want me to explain it again?
Yes, please.
Okay, so standard is what everybody can take whether or not you can itemize. It's for everyone. And I showed you the chart earlier for if you married, filing jointly, it's about $25,900. And if you're single, I believe it's 12,000 something, 500, I believe. So you automatically get it, even if you don't itemize. Itemized is all those expenses are reported on Schedule A. It's like your mortgage interest, the taxes you paid on your property, sales tax, charitable contributions, and medical expenses, a few more things. So those are the ones that are reported on Schedule A, and it flows through your 1040 to calculate your adjusted gross income. And itemize.
So it's best to itemize. Is it always best to itemize then? If it goes above the 25,000 if you were married? I think I'm trying to.
Yes, if the
understand that
itemized
part.
is higher than the standard, you take the itemized. You take the highest. If it's 50,000, I had a taxpayer where itemized was over $1 million. So it really depends on you, whatever you have. There's a cap, but it all depends on how much income you report as well. So
Okay, thank you.
Yeah. Okay, we went. The FSA, if you have kids, that happened to me the first couple years when I had my kid. I did not take advantage of it. It's a tax-free contribution you make before you pay the expenses for your kids. So that $5,000, you won't get to pay tax on it. If you wanna, let's just say you're in a $10,000 tax bracket, you're gonna save $500. So it's always best you contact your HR and they'll tell you how to do it. So it's always best. There's one for dependent care. That's the one you pay. Like the one we discussed earlier, the child dependent credit. You pay to watch your child for you. So if you have kids in daycare, you have someone watching your kids, that one. And the healthcare FSA is for your health stuff. You can buy stuff out of the over the counter, the toiletries, and all of that, medicine, all that covers under the healthcare
I have
FSA.
a question. So how would I need to prove that? Is that through like an employer, or is this something like, how would I prove what I pay? Say I have like a family friend who watches my kid and then I pay them cash. So how do I, or do I not qualify for that because I have to?
No, you can pay cash. That's the thing. We tend not to report our cash payments or income. So you have to prove it. You either write a check, and you have to show that that's the person, and the person can vouch for it, and you also have to ask that person. Most people, they don't want you to pay them. They don't want to put it in writing. It's called W-9. They have to fill it out. That means you hired them and all that. But if you cannot prove it, you're not qualified.
Okay.
So you have to
I
find
have to find a way to, if I pay cash to do the form would be the one that would prove it, really?
Yes.
I can't just write in a notebook that I pay this person this amount.
No, because there's no proof unless I think there's a form you fill out. You have to have it notarized that you're telling the truth. That's what it is. And the person you pay have to sign it. Okay, then the maximum age is 13. So if you send your kids to summer camp, all that is qualified. And you get $5,000. Okay, so who is liable for your taxes, your tax returns? Unfortunately, it's you. So if you don't hire the right tax preparer, whatever they end up doing on your return, IRS will come after you. The one I explained earlier is a special program they do. They go after the taxpayers, but generally they'll come after you because, it's highlighted here, you testified that everything in there is true and correct, and once you sign it, you're responsible.
Sister Myriam,
Yes.
if, for example, I'm not here permanently, my papers ain't right, should I bother pay taxes though?
If somebody is not a permanent resident or, or citizen of this country, should they still pay the taxes?
If you make the money, you have to pay the taxes.
I have to pay the taxes.
Yes. Don't let the IRS find out if you don't pay it. They will come after you. They want the money.
But I'm not documented in a form, and somebody's paying me. Should I, because eventually my paper is going to come up, and shouldn't I be able to show that I've been paying taxes? That'll help my process along?
If somebody pay you,
Yeah.
and how you show, I'm sorry,
If the person undocumented and therefore somebody's hired them, they're getting paid, how they should pay the taxes eventually once the paper came in, how can they show that they've been paying taxes even though they didn't have any paper? Is there provision for that?
okay, that you have to contact your tax professional. That will take too long to explain.
Okay.
But yes,
all right.
but there are ways, yeah.
I have
Because we're 7 o'clock.
I have a suggestion, but you can make sure you clarify if it's not a good idea. I don't want to do anything illegal. I think most people can, as you were mentioning, to start a business is a great thing. So don't make it a side hustle. So if someone is paying you some other way, if you put those under your cash, what you're receiving as a business, you put a business name out there. Anybody can do a business name. You don't have to be a legal citizen to apply for Sunbiz, to put your stuff on Sunbiz and have a business coming through that. So you should be able to get some kind of recompensation that way. I don't know, am I right or am I?
No, I mean, as long as if you have a social security number or an I-10, yes, you definitely should file and report that money, and any expenses that tie to that business, take the deductions.
Yeah,
And you don't need to be registered to call it a business. You don't have to go to Sunbiz. You can just have it. It's under your social security number, and you'll file a Schedule C, and this is how you prove it. You don't have to be so quick and say, I need to register. And again, people are always thinking about LLC. LLC is not a tax entity. It's just a legal entity. So IRS doesn't know what LLC is. And because it's legal, it's not a tax form. There's no tax form that says LLC. But there are tax forms you can file as an LLC. So you don't really need it to call it a business.
You have a question online. The question is, how do you filter out a good tax preparer? Do you have any tips because there's so many out there?
Good question. I think I have a slide on that. If I don't, I'm going to come back to you. You know what? We're running out of time. I was going to do this icebreaker, but we can't do it. We're almost done. Okay, and where's my refund? Go to the irs.gov. Where's my refund link? Or download the app or call the 800 number to find out. Before I move on, anybody has already filed the tax returns? I'm just curious. Anybody online? Okay, good. So I do have some tips on that.
Not yet.
Not yet. Okay, good. Because I will be talking about that a little bit. Okay, some key takeaways. Be proactive, stay informed, be in the know. Like, you need to know what's going on in your return and know what's going on in your life and how it affects you. File an accurate return. It's very, very important, because if you don't, it will delay your refund if you owed one. an e-file, the direct deposit, that will help you. And before you call the IRS and spend hours on the phone, it's best to find the resources online. Okay, we're gonna move on. Oh, that's another thing. The IP pin, I don't know if anybody has one. I mean, I have one. It's very important to get one. It's a way of protecting you. I just wanted to point that out to you. All taxpayers are eligible to get one, and they tell you different ways to get it yourself. If you make certain amount of income, what it does, it protects you where it prevents identity theft. So somebody cannot file a return under your social security number unless they have that PIN. And IRS sends you a new one every year. I already got mine for this year. And if you lose that though, it's gonna be a long process for them to recover it. 1 year I lost it. It took me a while before I could get another one. It's right here. How do you apply? If you make less than $72,000, you go to irs.gov, and there's a link that says Get an IP PIN, and you fill it out. If you make more than $72,000, you have to fill out this form, 15227. So before, people used to think it's because if you have, there was a data breach with IRS, everybody had that as an option. That's when I had mine. But now everybody's eligible to get one. And I would suggest it. Okay, these are some ways, some bonus tips I figured I'd give you guys, ways to lower your taxes. And we discussed that. It's important you contribute to a tax advantage account. Retirement account, we have traditional, where you pay the taxes on it later. You get a tax advantage now, but later when you get your money, you have to pay taxes on everything. I had a client real quick. He was retiring. He had some money, some pension money. He wanted to move. He didn't know what to do. His friends were telling him, put it to your savings account. He also wanted to pay off his mortgage. And they said, just take the money, pay off. I think he owed about $30,000 on his mortgage. Just pay it off. And I told him, hold on. So I helped him where I had him roll over the money. It was a traditional IRA. Traditional means you pay the taxes when you take the money. So had he taken that money out, he would have paid taxes on everything. And I saved them over $20,000 by doing it that way. And when I put the money to a Vanguard account for him, a rollover IRA, he said, if you do rollover, you don't pay taxes because you're rolling it over, it doesn't even get to your hand. And then I asked him to take a portion to pay his tax, to pay his mortgage, not the whole amount. If he had taken the whole amount, he would have to pay taxes on that. So that first portion before the end of the year, he didn't have to pay tax because of his tax bracket as well. And come first of the year, I told him, let's take the last amount to make it $30,000. He paid off his mortgage, and now he has more money than he had previously, and he didn't pay, so far he hasn't paid any money on that pension money. So, but every year, IRS requires you to take what's called an RMD. It just forces you to take some money out. And that he'll pay taxes on, but if you're under certain tax bracket, you still don't pay taxes. So there are ways to save money on taxes. We just have to have the right person on your side to know what they're doing. They have to know what they're doing.
There's a question online regarding to what you just spoke about. Question is, if you don't have an income, only Social Security, do you have to file taxes?
Who asked that question? Was that person listening? I'm going to call them out. Okay, don't. Yes, that's like I was saying, certain tax advantage you may not get if you don't file your return. It's always good to file. The Social Security, it all depends on what tax bracket it takes you. You probably won't pay anything. So you must pay it, and if you have that income, that EITC I explained earlier, that's a credit you could be leaving on the table. And also some people, when they take the Social Security, they take a tax withholding. They have them keep some withholding. So you must file to get that money back. So these are other tips, the credits and deductions, the saver's credit, which is a big one if you meet the income criteria, and the capital loss if you invest money in the stock market. I know last year was horrible. And unfortunately, it's too late now, but you can take up to $3,000 of loss against your ordinary income. So you don't need to have a gain in order to take it. $3,000 is a tax saving right there. And the HSA, if you guys don't know what it is, it's a health savings account. I'm not going to go too much into it, but it's a way you pay higher premium, but you can invest that money. And it's also tax deductible. And start a business. Immediately when you start a business, the first $5,000 of expense, you get to deduct 100%. And there are so many loopholes when you have a business. And I encourage everyone, if you have a W-2, you can still have a side hustle, a business, to lower your income. Okay, so those are some pros and cons of filing early. If you file early, you don't have to worry about deadline stress, and you don't have to worry about people filing under your social security number, and you have more time. If you owe taxes, you have more time to figure out how you're gonna pay the money. And then the con is that it can be costly. If you don't get all your documentation you file with a pay stub, it's not good to file with your last pay stub. If your preparer say they can do that, don't do it, because the last pay stub does not equal a W-2. It's not the same thing. And you're gonna have to amend your return, which will cost you more money. Okay, the question we had earlier, tips to hire tax preparer. Okay, so it's good to check and understand the preparer's credentials, qualification, and the license one we have in this country, we have CPA, we have EA, and we have tax attorney, and I'm the EA. And as an attorney, CPA, and enrolled agent, you can represent clients anywhere. The CPA is more of a state license, and the EA is a federal license given by IRS itself, and you can represent someone from anywhere in the country. And also review the taxpayer's history. Find out what the taxpayer's been up to. Ask around. And make sure the tax preparer has a valid P10, tax identification number, prepare tax identification number, and they must sign the return. And they should offer you the option to e-file your return. And make sure also the preparer is available year-round. And I'm not picking on any preparers we have here, but unfortunately we have some preparers, they're only there during tax season to make a quick bucks, and then at the end of April, they're gone. You cannot find them, you have questions, or IRS is coming, you cannot find them, and you are stuck, end up paying more money to get out of the trouble. And also ask about the fee. How do they structure their fees? Is it based on the refund percentage, which they should not do? It should be a flat fee. It will be different fees for different services, so you cannot compare what someone pays with this person with the other. If someone has a credential, of course it will be more. And also if someone probably don't really care, they just do data entry, and they may not charge you much. Again, you get what you paid for. Okay, and lastly, you are responsible for the information in the return. We went over that, so you have to do your due diligence. Okay, that's it. So if you guys have any topic you would like for me to cover for future workshop, you can put it on the chat, let me know. I'm gonna put my information on the screen. Do we have any more questions before we end? Okay, we have one in the house.
Yes, Sister Myriam, may I respond to one of the questions asked earlier? Re the non-resident paying taxes.
You want to respond to it?
Yes, yeah, and you can correct me if I'm.
Go ahead. Who's speaking?
Yes, this is Alfred Sharp.
Okay, go ahead, Alfred.
Yes, yeah, the IRS requires everyone to pay taxes once you earn, and the question was asked about those without papers. There is a number that you can apply for. It's called the ITIN, It's the individual taxpayer identification number. That's just for paying taxes. Whether you're a citizen or a permanent resident, you're required to pay once you earn. So that number is just for paying taxes.
Thank you, Al. Thank you, Alfred. Yeah, I think I mentioned that, yeah, you need an I-10 if you don't have your social security number. Thank you for the tip. I see a hand up, Samson SM. Who is that? Oh, I'm sorry. We have one in the house.
Is Myriam Dolsaint a tax preparer?
Myriam Dolsaint is a licensed tax professional, but yes, I guess you can call everybody a tax preparer. I'm an enrolled agent.
So it means someone could ask you to do it.
Yes, and it's on the next screen. I started my Up-Focus financial business. These are the services we provide. We provide IRS representation, tax planning, tax preparation. We do that for businesses and individual. We do accounting and bookkeeping work, business and financial consultation, financial coaching, like if you need help with your finances to get a good control of your businesses. And I am, through experience, education, I can say right now I was able to leave my job during a high inflation economy, and I didn't have to worry about anything because I know how to manage my finances and live a debt-free life. This is the life I'm living personally. Okay, and we also do tax and financial education to the community and the tax preparers, the ones that are not licensed. Even if you're licensed, you want tips on tax laws, how to decode it, how to run the business to help your clients. We are here to help as well. Okay, and these are my contact information. You can take a screenshot. And I will be starting a YouTube, but I will put the information on my website where I put a lot of tax tips, updates, financial videos, so a lot more. So stay tuned. Okay, if you don't have any more questions, we're gonna end. Earlier we did the spiritual, Earlier we did the spiritual part. Now we're doing the financial. Now we're gonna do the physical part of it. Today has been a very, very busy day. We're gonna have the guest trainer. I'm sorry, I was not supposed to say all that, but we have someone in the back where we're gonna do some exercise. I hope everybody's ready for that. Okay, thank you so much, everyone. It was really awesome. I had fun. I love talking about taxes, finances, financial stuff. It's like, I just love it. Okay, thank you.
Thank you too, Myriam and your husband.
Very
All
good.
right.
Very
Was she
good.
great, everybody? Was she great?
Awesome.
Yes.
Awesome.
Awesome. Thank you.
Awesome, awesome. I want to thank everybody for staying to participate and your question, and also to support the Family Life Department and for the type of information that we are bringing you. And I want to say thank you for Myriam for making yourself available to bring this special topic to the church. I know that is something that is dear to you. I have a passion for it. Sometimes I'm seeing you with all those numbers, make my head spin. That's not my specialty. So I don't do taxes. I stick to computer. That's IT. That's what I do. So my wife do the financial aspect. So again, we want to thank everybody, those of you that are able to come to the church, and also those of you who are able to log in online to participate. So without any further ado, we want to bow our head for a word of prayer. Heavenly Father, once again, we want to thank you for your grace and for your love and for your blessing. Thank you for giving Myriam the knowledge, understanding, oh Lord, to be able to bring forth this special workshop for the church and for the whole wide world and those that are able to log in online. I hope all the information I was giving help our brothers and our sisters utilize those knowledge to be a better steward of their finances. I pray, oh Lord, that your will be done as we conclude this Sabbath. May we have a wonderful week, and may you watch over us and keep our family and keep us safe. I pray in the name of Jesus Christ that live forevermore. Amen.
Amen.
Well, stay tuned. This is our second annual tax workshop, and we're looking forward next year to have another one, God willing. Have a blessed week. And let's go exercise, and so we can keep our body fit. Thank you so much. Have a wonderful week, everybody.